Hello, welcome to the program. Ahead, a host of media companies reporting results, many warning of difficult trading conditions to continue, but one CEO thinks that ad markets could turn after Easter. More about that in a moment. Also, the Herald Sun becoming the first of the News Limited tabloids to launch a partial paywall. We'll also be talking readership numbers with Newspaper Works boss Tony Hale and the first official results for radio and TV. There's a lot to get through, but first, while the country now waits for the outcome of Monday's Labor leadership spill, there's been wall-to-wall media coverage of the crisis. Kevin Rudd holding a dramatic news conference in the middle of the night in Washington to get his resignation announcement into the peak early evening TV news bulletins, while 10 brought forward the launch of its new breakfast show. Well, for more on this, we're joined by our co-host James Manning, the editor and publisher of Mediaweek. James, good to see you.
Hi, Bridie.
It's been a pretty dramatic 24 hours or so.
Amazing time, isn't it?
Sure has, and of course that wall-to-wall media coverage. How has it been received by consumers? Are they tuned to it or are they sick of it?
They are tuned to it. No, they're certainly not sick of it. It's already had an impact. As you mentioned, 10's breakfast kicked off today, and because of the press conferences held this morning, that's sort of 9 and 10 o'clock, they did a 4-hour show. So it was a good sort of introduction for them, a good tryout before I guess they start proper next Monday, which is their original start time. Sky News had a brilliant night last night. It's number 2 channel on the platform. Paul Murray's hour at 9 p.m. last night was the second most watched show on subscription TV, so people who follow this know where to go for it, and they certainly went to Sky News yesterday.
And just looking as well at the decision to bring forward breakfast, will we get any idea on how those ratings went on 10? Yeah,
there'll be a ratings figure at the end of the week for both the Thursday and Friday shows. I think they're going to be very low to start with, but I think the good news for 10 is that they seem to have got a good team. You know, there was good interaction between them all, very few sort of technical hitches, lots of live crosses and all that sort of stuff. And it was a fairly serious offering, you know. We thought, you know, maybe 10's targeting going to be more entertainment, a little bit of lighter shade, but it was well done, you know. It didn't get boring, wasn't heavy, but I think they've sort of hit the mark pretty much straight away. Business
has been really worried about the uncertainty that this continued crisis has had on confidence. Do you think that once it's sorted on Monday that we might see conditions improve?
Yeah, gee, it's not going to hurt. How much it's going to, you know, affect confidence, I'm just not too sure. It can only help it if there's a bit of stability. Will there be, you know, will it really end? I don't know. We need to ask David Spears and the guys about that, I guess. But, you know, but some people think there will be calm. You know, David Leckie this week said, look, he thinks it could be a bit rocky till Easter, but he thinks, you know, after Easter we could see a bit of an upturn. I don't know if he's linking that to political stability, though.
All right, plenty more to talk about with all of that. Let's get some analysis on those host of media companies reporting results in the past week. Chris Weston joins us from IG Markets. Now, Chris, we just wanted to start with some of the publicly listed free-to-air TV companies. 7 that came out, seemed to do very well, but 10, of course, punished after that profit warning ahead of its first half results.
Yeah, I think 10 confused me no end, to be honest there, Bridie. I mean, we saw it traded through the 80-cent October low. We thought we were going to see a lot of people coming in and short the stock. JP Morgan, CBA came and downgraded the stock because there's no getting around it. The guidance that they've given for their first half earnings was poor at best, and you know, basically if you put into the TV cost, looking at the guidance there which they've stipulated should be around EBITDA around about 64 million, was down about 40% on the previous corresponding period, and that if you put everything into the assumptions, the full year numbers should come out around about 44 million, which was about 36% below the consensus. So we expected more selling than we did. I think the market's gravitating towards these TV cost savings of about 40 million, down about 5%, plus the fact that when it fell through the 80-cent mark, you saw it trading on about 12.5 times forward earnings. The market's clearly saying a lot of bad news is being priced in. So after about an 8-9% drop yesterday, it's actually up about 3%. So that's very interesting indeed. If you look at 7 West Media, clearly the stock's been the best performer in the media space this year. You know, those comments from Mr. Leckie have certainly have inspired a few people into the stock, not to mention that 19-cent fully franked dividend, a fantastic carrot to be getting paid to be in the stock at the moment. They're growing their earnings 7%. They're also growing their revenue about 2% as well. So this seems to be the pick in terms of the free-to-air media space at the moment.
And we also saw that there were some falls for some of those big newspaper publishers, Fairfax and APN.
Well, I think Fairfax is actually is relatively flat today. I mean, they've come out with full-year net profit of 135 million. That's, you know, above the market. The market was looking for about 126 million. You know, they paid a 2-cent dividend, which was pretty much in line. The comments from Mr. Hayward today coming out pretty much inspiring, saying, you know, businesses aren't really bothered about what's going on with Kevin Rudd and Julia Gillard. They're selling our papers. So we're starting to see a bit of a turnaround story in there, relatively flat. On the other hand, APN's actually up about 1.2% today. So, you know, they've come out with an earnings number which has beaten the market expectations. OK, there's a $159 million impairment charge. They've come out with some fantastic narrative about a JV with this private partnership as well. And I think the revenue numbers were up about 1.3%, but they've beaten expectations. So, you know, we've got Fairfax flat, and you've got APN actually up about 1.2% after earnings today.
Chris, a lot to get through. Thank you so much for bringing us up to date. And in some other results, Consolidated Media's first half profit fell 7% to $42 million. The part owner of Foxtel, Premier Media Group and Seek Asia is blaming the challenging retail environment and general economic uncertainty. And we also saw regional pay TV operator Ozstar's full-year profit beat expectations with a full-year profit of $120 million, but subscriber numbers fell. It says the ACCC review of the Foxtel takeover of Ozstar is ongoing. Let's get James's view on that report, or certainly all these reports that we've had from a lot of these media companies. What's the general takeaway that you've seen?
Well, I mean, it's very bad out there. It's really tough, you know. The standout, I guess, was Seven, particularly their TV business, you know, performing fantastically well. They really do look unbeatable. David Leckie said, look, we won't be beaten. Well, very unlikely this year. They've got the AFL coming in. He factored that into putting them in a position where, you know, they're pretty much unassailable. Tim Warner, the new television CEO, talked about planning their 2013 schedule. You know, that's how confident they are about what they've got on plan for this year. Their print business, the newspapers and the magazines, they're conservative. The revenues are flat, you know, but they say they've got a good handle on costs, well positioned for an upturn. Chris mentioned the share price being punished. That ad share is going to be punished for a little while yet, I think, because what we're seeing in the revenues are a lag from probably last year, post MasterChef. They didn't end the year well. They haven't started this year well, so there's going to be a bit of hurt there for a time being. And Fairfax, you know, we're hearing about a new 3-year plan. Gee, you know, it sounds like a football team, doesn't it? We've got a 3-year plan. Look, we're not going to win for a while, but we'll get there eventually. So there's no real joy for investors there.
Looking at APN, this outdoor joint venture with Quadrant confirmed.
Yeah, Quadrant, a bit of media experience in investing. They're the people behind Censure Media, the old Media Monitors, which was rebranded recently. So yeah, that'll be interesting. They say, look, we're going to fund, the money will be able to borrow and have there on the balance sheet. Some of that will go to digital rollouts and expansion. A bit of speculation they could be perhaps looking at
Interesting too as well, just staying with APN for a moment there, we did see one of those executives leaving, Piers Cody, and certainly making some interesting claims about governance that APN is certainly disputing. Yeah,
there was some conflicting reports why he's left the company. The word from APN, as reported this morning, was that, look, he wanted a position on this new joint venture, which is going to, you know, expand the outdoor business, and he didn't get what he wanted, so that was why he's decided to split.
Now, Ten's outdoor company, we've also seen the CEO there step down.
Yeah, Mike Tyquin, who we've had on the show a couple of times. So yeah, it's sad to see him leave. So there's a bit of reorganisation going in there. Jerry Thorley, I think, has also been on the show. He was sort of the global chief executive. He's also taken over the reins of day-to-day operation of Australia. So there's some interesting things going on there. Although they did appoint a couple of people a bit further down the rung this week. So they're certainly not taking their foot off the pedal.
All right, and just some news as well that we've been following when we turn to newspapers. The Herald Sun is to become the first of the News Limited tabloids to launch a freemium subscription model. This follows the similar partial paywall which was set up by The Australian last October.